Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. The dollar weakens, Treasury yields and futures. Treasury yields down, futures rise as traders pare back the so-called Trump trade. Latest polls suggest a race to the wire between Kamala Harris and Donald Trump. The two presidential candidates rally last-minute support in the Battlegrounds states, with both emphasising their competing economic platforms. Plus, oil rises after OPEC Plus members agreed to delay a production hike, and as Iran is reported to be planning a strong and complex counterattack on Israel. To the earnings story right now, breaking lines crossing from the airline Ryanair. Second quarter revenue coming in below the estimates. 5.07 billion euros was the number for the second quarter. The estimates had been for just shy of 5.2 billion euros. And importantly, Ryanair is cutting its full year 2026 passenger goal to 210 million on those delays from Boeing. We know, of course, that members of the union in Boeing and at Boeing and the workers will be voting on the latest deal, the latest offer. We know, of course, that there has been significant delays in terms of deliveries as a result of some of that labour disruption and other supply chain issues, safety issues from Boeing to some of their customers. And Ryanair, of course, is a key customer and dependent on those deliveries from Boeing. So clearly the impact is being felt there from Ryanair as they project out in terms of passenger numbers. Third quarter deliveries as well expected to slip into the fourth quarter again on those Boeing strikes. And later this hour, 6:45 a.m. UK time, we'll be speaking to the Ryanair CFO, Neil Sorahan. So we'll be asking him about that projection in terms of softer passenger numbers and the impacts of Boeing on this airline. Let's get to the main markets, though. Check in on the markets. It is all about the dollar right now, the unwind of some of those Trump trades. You have a softer dollar falling to the lowest level since about August, and bond futures lower as well in terms of US Treasuries on expectations that this is a much closer race. Some of the polls suggesting that Kamala Harris has an edge in states, for example, Iowa. Just one poll, but of course, broadly across the picture, this looks like an incredible tight race as we head, of course, to the final day on Tuesday. European futures currently pointing to modest gains of 0.1%. The FTSE 100 currently off by 0.1%. S&P futures looking to add 0.3% after ending in the week lower. Of course, both US and European stocks were lower by the end of the week. Nasdaq futures looking to gain around 0.4%. We had some positive earnings from Intel and Amazon to play into these markets. Let's flip the board and look cross-asset then with that focus, of course, on what's happening in the dollar. The Bloomberg dollar index currently down 0.6%. The softness there, and that's impacting to the upside emerging market currencies. So they're gaining on the back of this unwind, at least around the edges to the Trump trade. Euro dollar at 109. The single currency up 0.6%. Brent $74.33 on reports that OPEC Plus and the decision there to push back some of its cuts and the threatening rhetoric coming out of the leadership in Tehran, Iran, of course. Gold at 2,740 per troy ounce, currently up 0.1%. Let's cross over right now to Singapore. Avril Hong standing by for a check on the Asian markets. Avril.
Yeah, Tom, Asia stocks currencies mostly higher amid the unwinding of the so-called Trump trade. It is a big week for markets in the region, US elections, the Fed, but also China's NPC. And against that backdrop, we're seeing Chinese equities managing to clock some gains. The real underperformer are those in India. Japan, of course, is off for a trading holiday. And this that you're seeing on Indian equities is partly to do with earnings disappointment, but also the rotation towards Chinese stocks. Now, let's flip the board and take a closer look at what we're seeing in the FX space. As I mentioned earlier, most of them are gaining ground against the greenback today. The dollar is softer amid the unwinding of the so-called Trump trade, and the yen is really the one that is outperforming here. And this is not just a dollar story. Obviously, there is some boost from last week, the BOJ shift in tone as well. But keep in mind, because it is a Japan trading holiday, any move you're seeing in FX might be exaggerated as well. Flip the board. Let's take a closer look at this chart, courtesy of MLive's Mark Cranfield, which shows you the the Hang Seng volatility, and this line in blue here shows you how it's really a surge of late. And you think back to 2022 and two periods where we also saw similar climbs actually foreshadowed extended declines in the Hang Seng, which gives you a reminder to what's at stake from the Chinese NPC this week. Already we're hearing that even if we do see a magic number, trillions of yuan of fiscal stimulus being announced, it's going to take a while for there to be any furnishing of those details, which might make any gains in the Chinese stock a bit difficult to sustain. So keep that in mind in a big week for markets. Tom.
Ava Hong in Singapore, thank you very much indeed. Yes, the details out of the NPC in China hotly awaited, and of course the impacts of the US election on China's economy in focus as well, and I'll unpack that story for you across this hour as well. Let's get to the polls then and the Trump trade. The polls giving no clear indication right now of who will win the US election tomorrow. Some investors are pairing the so-called Trump trade, as I mentioned. Let's bring in Bloomberg's Valerie Teitel with more details on how markets are repositioning. Val, what are we seeing?
A bit of a repositioning over in the Asia session. It's following through to Europe this morning. We saw a boost to U.S. Treasury futures. They're unwinding a lot of the weakness we saw on Friday after the payroll report. The Bloomberg Dollar Index is also in the red. We're also seeing underperformance when it comes to U.S. small caps. So that is yet another unwind of a popular favored Trump trade. And lastly, Bitcoin is also in the red, down 0.4%, a bit of unwinding the recent positivity there. I want to flip the board and just talk a little bit more about the futures, the FX market that we're seeing. If you look especially, Tom, at the currencies that are exposed to these tariffs, I'm thinking dollar MEX, the Mexican peso, has strengthened 1% versus the dollar so far in the Asia trade. And then dollar CNH, the Chinese yuan, as Avril was talking about there, another tariff-exposed FX pair that we're watching, also strengthening versus the dollar. So there has been an unwind in the Asia session of this Trump trade. Let's flip on and just see how the betting markets have been faring, because over the weekend they did flip in favor for Trump, and in favor for Harris, and a bit overshadowed the kind of moves that we could see in the Asia session on this flip. In the betting markets, they actually flipped on Friday, but Harris climbed a bit further as the weekend rolled on.
OK, Bloomberg's Valerie Teitel, thank you very much indeed on the market reaction to some of the polls that we've had out of the US in the last 24 hours or so as we close down to that deadline, of course, and the vote on Tuesday. Valerie, thank you. We'll stay on this topic because US Vice President Kamala Harris and former President Donald Trump remain, of course, deadlocked in opinion polls ahead of Election Day. New surveys have them neck and neck nationally, and more importantly, arguably, across those battleground states that will decide the outcome of the US election. Let's get more with Bloomberg's opening trade anchor, Kriti Gupta. Kriti, what for you have been the key takeaways of the most recent polls that we've had?
So you say neck and neck, and that absolutely has been the result of NBC. But what's kind of shaking some of these markets here is one poll in particular, and that's the one out of Iowa, the Des Moines Registrar. And the reason this one is so significant is even though it's not necessarily a swing state, Iowa has in the past been a swing state, it will not be this time, according to the most recent population kind of counts as well. What you need to keep in mind is this is a poll that has been right 4 out of 5 times in history. So it's seen as a very, very strong gauge. And last time around, during the Trump election, or the Trump win, during his first presidency, accurately predicted his win and then accurately predicted his demise as well. That being said, this poll is now suggesting a Harris lead from about 47% to 44% in Iowa. So again, showing that the other polls that you're seeing are not actually wrong when it comes to those Harris leads, specifically in those battleground states. But this morning, it's the Des Moines poll that is taking all the headlines. Yeah, indeed. So both candidates, meanwhile, throwing everything at it as they get to that final stage of this lengthy election process in the US. What are both candidates doing? What are you watching for in the next 24 hours or so? Well, digging into the strategies that they've been kind of pursuing so far anyway, a lot of this from the Harris perspective has been vote for me, not just because of my policies, but also because I am not Donald Trump. But she's really been leaning into some of the criticisms from his former cabinet members, likes of Mike Pence, John Kelly, among others who have pulled back and said, actually, we've worked for him and he's not the right fit. Trump, on the other hand, really leaning into the idea that Harris actually hasn't done a whole lot during during her time as vice president for the Biden administration for some of those key issues like the economy and, of course, like the border. And I think in the last 24 hours, her comments and her track record on immigration has really, of course, been front and center. Remember, the top voting kind of topics or voting issues for this election are the economy, it's immigration, then things like abortion and gun control, all of which are, of course, being talked about on the campaign trail.
Priti Gupta, thank you very much indeed for the latest in terms of how these polls are shaping up and what both candidates are doing in that last final stretch of this election. Later this hour, we're going to be speaking to Alyse Killeen from Stillmark on the impact of the US election on the crypto trade. That's a business that invests heavily in the infrastructure, particularly around crypto and Bitcoin. So we'll get that perspective as Bitcoin softens about 0.3% in the session. Trump expected, of course, to favour that sector should he win that US election. Here's what else to be thinking about then this week. Tuesday, it is, of course, the US presidential election. We will have full coverage of that for you, of course, with all of the market impact throughout Tuesday and Wednesday, continuing into the week, of course. On Wednesday, on the earnings front, we get Novo Nordisk. Those earnings crossing with a touch, of course, on the demand for those weight loss drugs. That will be central, of course, to the earnings story when it comes to Novo. And on Thursday, the rate decisions coming through from the Federal Reserve, expected to cut by 25 basis points. The Bank of England as well in focus, particularly interesting on the back of that budget from Rachel Reeves here in the UK. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go on the terminal. Coming up, Chinese lawmakers gather in the shadow of that US election to sign off on a fiscal package that could run into the trillions of yuan. We are live in Hong Kong for what to expect on that and how China is positioning for either Kamala Harris or another President Trump. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Monday, everyone. Let's return to the US election and the ramifications for China, because the next person, of course, to enter the White House could impact any further stimulus in the world's second biggest economy. It comes as the country's top legislative body meets in Beijing this week to discuss those potential measures. Let's bring in then Bloomberg's Minmin Lo, China correspondent, joining us out of Hong Kong. Minmin, give us a sense of how the US election is being viewed in China, to what extent policymakers and lawmakers in the hallowed halls of Zhongnanhai in Beijing are positioning, thinking about and putting in place measures to ensure that that economy can still be sustained, what impact they expect to feel from this US election.
Yeah, I think the fact that the NPC meeting is being delayed by a few weeks from the usual early October to early November suggests that the policymakers are watching the election very closely. The election outcome would likely factor into their considerations in terms of the final economic stimulus that they plan to announce perhaps at the end of this week. And at this moment, based on what we have been speaking, what analysts have been telling us, any sort of Trump tariff risk is likely already priced into equity markets, and it is going to be those stimulus that will impact the Chinese economy more. And our Bloomberg economics team have done a bit of number crunching to look at what a Trump versus tariff win could do for the economy. So a Harris win could likely mean more policy continuity, and if we do see that continuation of this limited decoupling, our Bloomberg economics team believes it could weigh on China's growth by about 0.4 percentage points next year, and a more serious decoupling could weigh on growth by about 1%. But if Trump wins, that will raise the likelihood of tariffs. A 60% tariff by some analyst estimates could also weigh on growth by about 0.4% next year. But if we do see this global retaliation, that could mitigate the impact on trade as China looks to other more neutral countries to diversify their trade to, and also double down on their self-sufficiency push when it comes to high technology.
OK, so either way, it seems you get a growth hit to the downside for China,
Yes.
whoever's in the White House. What are investors looking for? What are analysts focused on when it comes to this National People's Congress, this key decision-making set of meetings over this week? Where is the focus and the expectation?
Yeah, I think market consensus right now is that we could see this 2 trillion yuan in additional stimulus this year, but market expectations are ranging between 6 to 10 trillion yuan if you look at a multi-year time period, perhaps a 3 to 5 year time frame, and these would be bond issuance to support the property sector and also to tackle local government debt. But what is key to watch is really the source, who is funding this bond issuance. If it's going to be local governments issuing new bonds to refinance their own shadow, then that essentially isn't really a form of fiscal expansion. It isn't really the same as injecting new money into the economy. But if it's the central government rather than local governments that are issuing these bonds, then I think that will be welcomed by markets because it would signal that the central government is taking more debt burden away from the local governments. But the wild card is really the consumption measures, whether there will be detailed measures to lift consumption directly, perhaps in the form of subsidies or cash handouts, something beyond that equipment upgrading program that we have seen so far.
OK, Bloomberg's Min Low in Hong Kong on what to watch for from that National People's Congress taking place right now in Beijing. We appreciate it with the details. Sticking with relations between the US and China, of course, both nations, and that tension has been there, facing multiple challenges, of course, in terms of recent years, in terms of how things have unfolded. Both Republicans and Democrats are signalling a tough stance towards Beijing. Our chief North Asia correspondent, Stephen Engel, looks at how the US election is being viewed in China's corridors of power.
While Beijing likely isn't enamored with either Donald Trump or Kamala Harris, and Chinese leaders are not showing their hand, it would be overly simplified to assume China would prefer, say, continuity over unpredictability. Like the entire U.S.-China relationship, it's far more complex than that.
I think from a Beijing standpoint, they would prefer Trump as president than the Democratic candidate, because the track record shows that Donald Trump is not as anti-China as he's perceived to be.
And yet, Trump has made it clear that he would continue to take a hardline approach on trade with China, threatening sizable tariff increases on all Chinese imports.
I'm telling you, outside of love and religion, it's the most beautiful word there is, tariff.
Now, he has this crazy notion that putting a tariff of 60% on every single product imported from China is a good idea. Let me just tell you, this man has so little understanding of tariffs, he thinks that China pays for them.
Inflation, no doubt, is on the mind of U.S. voters, and Harris has blasted the former president's tariff plans as a Trump sales tax. And yet, the current Biden administration has maintained Trump-era tariffs on some $350 billion worth of Chinese goods, and even added billions more on other Chinese products, including electric vehicles. Perhaps by design not to antagonize American workers in manufacturing swing states, Harris has been less specific on what her trade priorities would be, repeating that America must protect and build its competitive edge over China in critical sectors like advanced computing and semiconductors.
The third pillar of our opportunity economy is leading the world in the industries of the future and making sure America, not China, wins the competition for the 21st century.
There was a narrative that I think that was prevailing when this administration took office, that the United States was sort of on the verge of being surpassed by China as an economic power, that the United States' influence was waning in the world, that China's influence was on the rise.
And that's where geopolitical differences between China and the U.S. also hang in the balance. No one knows for sure how either candidate will deal with contentious issues like Taiwan, the South China Sea, Ukraine, and the Middle East. Not to mention trade policies based on national security concerns.
If Kamala Harris comes in, I'm sure it's going to be status quo, and we'll have the continuation of the current policy, which is driven by the national security lobby. To me, this is the policy that hurts China the most.
Or does it? China's not saying.
We have repeatedly stated that we do not comment on the U.S. elections and oppose any U.S. individuals making an issue of China during the elections.
At some point, we know China will inevitably take a stand, regardless of who's in the White House. Stephen Engel, Bloomberg News.
OK, coming up, Berkshire Hathaway's cash pile reaches a new record. That's as Warren Buffett continued to refrain from major acquisitions while trimming his Apple stake. Once again, we get the latest on the world's most famous investor. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Berkshire Hathaway's cash pile reached a record $325 billion in the third quarter. The conglomerate also cut its stake in Apple once again, this time by about a quarter, so not unsubstantial. For more, let's bring in Bloomberg's Charlie Wells with the details on this. Charlie, so Warren Buffett, $325 billion of cash. There's no acquisitions out there for him. He's not seeing anything that whets his appetite he wants to pull the trigger on. What's going on? What should we read into this?
I mean, Tom, talk about the definition of a good problem, right? So Warren Buffett likes to buy low and sell high. He's kind of been selling high but not buying low. And, look, the S&P 500 is up about 20% this year. Warren Buffett's own company, Berkshire Hathaway, their share price is up over 25%. And one of the moves that Buffett tends to make when he can't really find a lot of good deals is to buy his own stock. But this is the first time since 2018 when even that stock is looking like it's too expensive for him to buy. But look, Buffett's a patient investor, and he himself has said that he's happy to sit on the sidelines until they can find investments that are very low risk, but could also make them a lot of money.
What do we read into the cut to the Apple stake? There's a lot of hand-wringing. Maybe someone said, well, he's seen something in Apple that concerns him. Is that how we should be thinking about it, or is this just a reshaping of the portfolio, reweighting of the portfolio?
Yeah, I think that Apple share sale is probably the flashiest thing to come out of this earnings report. And I think you could kind of read into this one of two ways. One is that he's got some questions about Apple, and they've had some softness, of course, in China. And Buffett himself has never been a huge tech guy, right? He invested in Apple, and that's gone really well for the company. There was a time when he invested in IBM. But on the flip side of this, Warren Buffett himself at their annual meeting in May talked about how great of an investment Apple has been, and it truly has bared out in their portfolio. This is probably more of a trim. This is probably more just limiting some of that exposure that they have. This is one of their top holdings, and probably trying to head off some tax hits in the future.
OK, so tax and a trim rather than a big warning sign on Apple's prospects, maybe. How did the rest of Buffett's conglomerate fare this quarter?
So Berkshire Hathaway, I think you could call it, the last great American conglomerate. And we really have to talk about hurricanes here, because insurance is a really big part of this American conglomerate. And Hurricane Helene, took a really big hit on some of their insurance underwriting. And when you look at that segment of the business, earnings from insurance underwriting were down 70%, so significant there. The company was also saying that in the fourth quarter, so a projection, Hurricane Milton could also hurt there. So that is, one of the more negative readings to come out of this report. Positive upside here in a totally different space is energy. They saw a bit of a rebound there.
Did we get any signals about the future of this business under Buffett as we look into 2025?
So look, I think he's 94 years old. Yeah. He's already tapped Greg Abel to be the next CEO. I think strikingly, one of the issues whenever Abel takes over is going to be that cash pile, right? That is going to be an inheritance of a good problem. What does he do going forward? I think that's what everyone's going to be focusing on.
And incredible, isn't it? 94 and still performing at the highest levels. Charlie Wells, thank you very much indeed for the latest in terms of Berkshire Hathaway, how they're thinking about deploying that cash pile that they have yet to pull the trigger on, and that cut, of course, to the Apple holdings. Coming up, Bitcoin rally, the falter in that rally, of course, linked to what we're seeing in terms of the run up for the White House. We're going to take a look at the impact on the crypto space, the result of US politics. That's coming up. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. The dollar weakens, Treasury futures rise as traders pare back the so-called Trump trade. Latest polls suggest a race to the wire between Kamala Harris and Donald Trump. The two presidential candidates rally a last-minute support in the battleground states, with both emphasising their competing economic platforms. Plus, oil rises after OPEC Plus members agree to delay a production hike, and as Iran is reported to be planning, quote, a strong and complex counterattack on Israel. Let's check these markets then. The earnings story is part of the mix, but certainly the run-up to that vote then out of the US on Tuesday, and expectations, of course, that this is going to be a very close race indeed, as the polls have consistently suggested. But there's a few details out over the weekend in terms of the polling numbers, particularly one poll out of Iowa that has led to an unwind, at least around the edges of that Trump trade. As a result of that, you are seeing softer dollar right now to the benefit of emerging market currencies. European futures pointed to gains of 0.1%. FTSE 100 here in the UK pointing lower by 7 points, down just 0.1%. Nasdaq futures also pointing to the upside, 0.4% gain coming through for Nasdaq 100 futures. S&P futures looking to add 17 points at this stage. Let's flip the board and look cross-asset then, with the focus firmly on the US dollar. Softer then in the session by 0.6%. Euro dollar getting a bid up at 1.08, up 0.6%, largely, of course, down to softer dollar. Brent getting a lift as well. So there's the geopolitics, there's the rhetoric hardening out of Iran, but also the decision for OPEC Plus to push back some of its cuts to supply. That is lifting oil in the session today. 74.42 up 1.8%. Gold trading up just 1 point, currently at 2,737 per troy ounce, dollar per troy ounce on the yellow metal. From gold to Bitcoin now, because the cryptocurrency's push towards a record high is faltering, at least in the session today, as investors dial back some of those bets on a win for Republican nominee Donald Trump, widely seen as pro-crypto. I'm joined now by Alyse, Killeen, managing partner at Stillmark, someone, of course, with deep understanding, deep knowledge of the crypto space and a long-term investor in some of these crypto assets. Alyse, talk to us about the movements that we're seeing in Bitcoin today, the linkages between the modest softness we're getting in Bitcoin and what has transpired in terms of that US election. Are markets right to be pairing some of their bets on Bitcoin?
Well, Bitcoin is up 60% year to date. It's almost doubled. It's doubled in price over the past 12 months, and we're only a couple $1,000s off the all-time high. So Bitcoin's performance for the year has done quite well. People may be hesitant around the results of the upcoming election, but we are optimistic, regardless of the outcome of the election, that this will be a positive result for Bitcoin, as both candidates have advanced positive crypto policy agendas.
So whoever's in the White House, good news for crypto. Talk to us about some of the differences, though, Alyse, in terms of the potential policy agenda of whoever is sitting in the White House. Do you have clarity on where that difference lies?
So as I said, both candidates have advanced a pro-crypto agenda. While the agendas have been relatively broad, of course, what's important is how they're enacted, which once we have the election's successful candidate in office. So what we've heard from Harris is that she's looking to advance policy that will allow protection for investors and holders of Bitcoin. And while she hasn't provided a detail of the policies that she would enact, we can assume that this will include actions around protecting self-custody or encouraging custodians to enable self-custody off-ramps that are easy and frictionless for their users. And we would also hope this would include encouragement around the adoption of proof of reserve for crypto banks and exchanges. Now, Trump has said that he would be looking to step back from the crypto crackdown that's perceived to have happened in DC. He's also explicitly stated that he would protect the ability to mine, the ability to maintain self-custody of crypto assets and Bitcoin, as well as to transact without government surveillance. But what I said before is most prominent in our minds, which is that it's the inaction of policy rather than the statement of a campaign agenda that will be important to the industry.
What do you think that means then from both sides for the future of Gary Gensler and the SEC, who are seen to have been taken a slightly more robust approach more a combative approach to this ecosystem. Does that mean the wings have been clipped or will be clipped for the SEC?
We expect, or perhaps I should say the industry is hopeful, that either administration would reconsider those in charge at the SEC. We would be looking to find someone that would provide a clear and transparent policy framework that allows entrepreneurs to operate with respect of the law and to know that they're doing so. And for that policy, those regulations to be applied uniformly across the industry. We're also hoping that the new administration will work in partnership with the industry. And what I mean by that is that as policies are developed, that the leaders of the industry are transparently brought in, that the industry's behavior towards self-regulation or what the industry can proactively offer is regarded, and that whatever regulation is advanced, of course, protects innovation and allows for the value of the invention of Bitcoin to be preserved and for end users to continue to access the full breadth of value that is inherent in Bitcoin.
Where do you see, Alyse, where is the catch-up in terms of the US ecosystem versus maybe some other competitors globally? Are there parts of this story where, whether it's Singapore, what's happening in the UAE, that there is an advantage there, a gap that needs to be closed that you can identify?
That's exactly right. So in addition to looking for a clear policy framework that entrepreneurs can count on, build against, and then rely on, and for industry partnership, we're also hopeful that the new administration will look to position America competitively against other nations that have taken a progressive approach to regulating the crypto and Bitcoin spheres. Right now, America is in a position of leadership and innovation. For example, builders of Bitcoin's payment protocol, the Lightning Network, are all based in the US, or excuse me, the leaders, category leaders in the field are all based in the US. So from protocol development to the development of node infrastructure, which is akin to the AWS of the internet, that those companies building that sort of infrastructure are also based in the US, as is the leading compliance software provider for enterprise. And to maintain that sort of advantage and edge, we will need to have progressive regulation that's respectful of the utility that Bitcoin can provide, that's crafted from a studied approach of what the technology offers, done in respect of entrepreneurship and of the value that Bitcoin can bring to end users.
Is generative AI a tailwind or a headwind for crypto, given both the funding demands and the energy demands of both sectors?
Generative AI is certainly a tailwind. And so we also suspect that it's one of the reasons why both candidates have felt the need to advance crypto agendas within their campaign. And so I say this because it's quite unusual. And of course, this is the first presidential election in which candidates have both advanced Bitcoin agendas. This reflects the sort of demand of the constituency, the voting population, or the importance of Bitcoin to the voting population. And that includes the importance of Bitcoin to other nationally relevant and globally important industries like generative AI and the shift to renewable energy, which of course is also relevant to generative AI. Now, it's important to note in terms of Bitcoin and generative AI is that for artificial intelligence and the capabilities that we've seen be introduced in the past 18 months, for that to really flourish and to gain global adoption, that will need to be matched with a payments infrastructure that can handle micro payments at scale. And this is exactly what Bitcoin's Lightning Network, its payment network, is designed to do.
Okay.
And Bitcoin's payment network is the only network in all of crypto that can scale to the transaction capacity that can meet the demands of generative AI.
OK, Stillmark managing partner Alyse, Killeen, thank you very much indeed on what to expect from either candidate when it comes to this US election and the impact on crypto and some of the other catalysts to watch for in 2025 as well for that space. We appreciate the insights. Now, some breaking news across the terminal just in the last couple of minutes. Schneider Electric appointing Olivia Bloom as the CEO, effective immediately. This is according to an emailed statement from the company. It says the board is removing Peter Herweck as the CEO due to, quote, divergences in the execution of the company roadmap at a time of significant opportunities. Olivia Bloom has been at the business since 2001 and is currently the Executive Vice President for Energy Management. The stock, by the way, is up 34% year to date. Now to the energy story. Oil advanced after OPEC Plus agreed to push back its December production increase by 1 month, and tensions escalated once again in the Middle East. Let's get more from Bloomberg's Asia and Energy and Commodities editing team leader, Andrew James. Andrew, talk us through the reaction then and what's been driving the decision behind OPEC Plus pushing back by 1 month.
Hi, Tom. Well, this is the second time OPEC Plus has pushed back, delayed this. The planned date's from June, when they said they were going to gradually restore about 2.2 million barrels a day of oil that have been sidelined over the past couple of years. It was originally supposed to start happening in October, then December, and now it's been pushed back by another month. They were going to start with just 180,000 barrels a day. The backdrop to this, of course, is the falling oil prices. We're down about almost 20% now from a high point in early April. We've got sort of a faltering demand situation in China, but perhaps more significantly, we've got big increases in production from outside OPEC Plus. Particularly the US. Interesting fact that the US is actually currently pumping 50% more oil than Saudi Arabia at the moment, but also from places like Canada, Brazil and Guyana. So, I mean, OPEC Plus, I think, have just come to the realisation that it was just a bad time to be restoring production.
That is a remarkable statistic. The US is pumping 50% more oil than Saudi Arabia. Talk to us about what else you and the team are watching for when it comes to the oil space this week, particularly with, of course, what we've been hearing from some of the leadership in Iran.
Yeah, hi, Tom. Well, of course, that's the other factor that's pushing up oil today. We had that speech over the weekend from Iran's supreme leader. Really interesting shift in tone there. He was quite measured after the Israeli strike just over a week ago, but in this new speech, he was promising a pretty robust response. We also had a Wall Street Journal report suggesting that they would use more powerful warheads in this attack. So, I mean, that's also been pushing oil up today. Ironically, one of the few things that could sort of meaningfully push oil up at the moment would be a significant escalation in the Middle East that sort of started to affect oil infrastructure or transport. And I mean, we've got a few other things happening. Obviously, the US election, we have a Fed decision, we have a big policy meeting in China this week, and the Saudi Aramco result. So there's a lot of moving parts here.
Yeah, just a few factors, Andrew. Sounds like you and the team will be very busy indeed. Thanks for the update on the sector. Bloomberg's Asia, Energy and Commodities editing team leader Andrew James on what is moving these oil markets, with Brent currently at 74.46, up 1.9%. We appreciate it. Now, some other stories making news this Monday. The office of Israel's Prime Minister is being accused of leaking classified documents to foil a ceasefire in Gaza. A judge says 4 people, including a Netanyahu spokesperson, have been arrested and accused of removing sensitive IDF intelligence. Opposition leaders say it's the latest example of Netanyahu manipulating public discourse around the conflict. Netanyahu rejected the probe as a, quote, deep state witch hunt to discredit him. The UK Chancellor of the Exchequer, Rachel Reeves, has said she was wrong to tell British voters before the election that her Labour Party would not announce new tax increases. Last week, she unveiled a £40 billion package of revenue raises, including changes to payroll levies and inheritance tax. And Spain's King Felipe has been pelted with mud and insults during a visit to the flood-hit Valencia region. The Prime Minister, Pedro Sanchez, was rushed away by security, but the King stayed to speak to a group of protesters. Anger is growing over the government's handling of the flash floods, which have killed at least 211 people. Spain's government is deploying 10,000 military and security personnel to the region. And Moldova's president has declared victory in yesterday's runoff election, bolstering her bid to steer the country into the European Union. Maia Sandu won 54% of the vote against a challenger who favoured closer ties with Russia. Sandu has accused Moscow of meddling in the country's democratic process. Coming up, as Ryanair cuts its growth passenger target for next year, CFO Neil Sorahan will join us to discuss the airline's latest earnings. That is next. This is Bloomberg. Welcome back. Now, Ryanair has cut its passenger growth target for next year due to delivery delays from Boeing. The Irish low-cost carrier now expects 210 million passengers in fiscal 2026, down from a previous goal of 215 million. Very pleased to say we can bring in right now Neil Sorahan, CFO of Ryanair. Neil, thanks for coming to the studio. On the back of this, how confident are you can get to 210 million then, given the challenges around Boeing?
I'm hopeful. There's a big vote taking place in Seattle tonight. Labour union hopefully going to accept the latest deal on the table from management, and we would like to then start seeing our aircraft coming in. This is our best guess on what might happen. We were due to get 11 aircraft in the quarter between September and December. We've received 2 of those. I don't think we'll see any more aircraft this side of January or February. We look like we could be left short 10 aircraft, possibly more, into peak summer of 2025. We're now planning on the basis, as you said, of 210 million passengers instead of 215. We had the situation this summer and last summer where we were overcrewed, we were overscheduled, and we just don't want to be there again. So even if we do get some more aircraft, we'll use those as operational spares. So I'm hopeful rather than confident that I'll see those aircraft coming in. And as I said, we're now planning on the lower growth.
So you're planning, to be clear, you're planning on 10 fewer aircraft than you'd expected for that peak summer season next year. What does it mean for fares and pricing? Because fares have come down, 7% in the most recent quarter. Yeah, do you see further softness in fares to bring customers
in fairness, I think the declines are moderating. Bookings are strong into Q3. We think fares will be still modestly down. We're somewhat cautious on Q3, but I think it's in a better place than it was. We had the impact in Q1 of the absence of Easter. The consumers have been dealing with higher interest rates for longer. They're starting to unwind in Europe now at this point in time. Consumer seems to be a bit more confident. Capacity is definitely constrained. We just talked about Boeing there. Airbus are having problems getting aircraft out the door as well with the Pratt & Whitney engine issue. We're seeing consolidation playing out with ITA and Lufthansa, and TAP is going to go up for sale. So I think capacity is going to be constrained for some time, which would indicate that potentially more risk to the upside than the downside on pricing, but it's too early to...
More risk to the upside than the downside on pricing. What's the outlook for the winter season?
Well, we aren't guiding for the full year. We have said in Q3, booking strong, fare declines moderating, so a modest decrease. Q4, we won't have an Easter in there. We've got less than 10% of our bookings in the bag, so it's just too early to call where that might actually go for the Q4 period.
Are you going to be cutting flights next year?
Well, as I said, we're planning on the base of 210 million passengers, which is below where we were. So we've got plenty of time out. We hope we won't be. But, it all depends on whether we get the aircraft from Boeing or not.
Where would you look to cut? Is there an obvious place?
Well, I think if you look at the likes of the UK, for example, where we're now looking at another €2 APD coming through. We've a situation where the Swedish, for example, are cutting their APD. We've got the Hungarians cutting back. We've got the Italians in parts of the regions cutting back on their municipal taxes. And at the same time, we're seeing increases coming in here. So I think that can't be good for the regional UK. Germany cost base is too high at the moment, so we've pulled capacity out of Germany. The reality is, if we've got less capacity, we've got more airports than we have capacity to fill that. So we're going to go with the best opportunities.
And to be clear to our audience, you're talking about, of course, the budget and the increase in passenger duty here in the UK. And you and the team have been quite vocal on that.
Which was a negative step for obviously the UK.
So to be clear, you are considering cutting some routes, or at least cutting some flights in the UK as a result of that, to mitigate that?
There's a high chance we will.
Where would you be looking?
Well, I think the regions are going to suffer more than London. So you'd see possibly parts of Scotland, parts of middle UK. But it's all up for play. I think it was a backward step for a government that said they were trying to stimulate growth and trying to stimulate tourism. To do that in the budget last week. But, that's just one of a number of regions which are not stimulating growth. We've got lots of countries which are stimulating growth, and we're very happy to grow there.
Neil, before we let you go, what's happening in terms of, getting back to the Boeing question, the certification of the MAX 10? What is your best guess in terms of the timing for that?
Yeah, it hasn't changed, Tom. So the MAX 10 won't be certified until the MAX 7 is certified. At this stage, I think the 7 will be certified somewhere in the first half of 2025. That would leave the 10 to be certified in the back half of 2025, and then we'll still receive our first MAX 10 in H1 2027. So no changes there. If anything,
are you confident that happens, that time frame?
Look, you can never be fully confident, but I think the one thing about the strike is that there's been more time for the FAA and for Boeing to concentrate on the certification process, so that may have actually accelerated that.
Okay, Neil Sorahan, always appreciate your time. Thank you very much.
Thank you.
CFO, of course, of Ryanair on the back of those earnings. There's plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. It is very much edge of the seat stuff when it comes to this US election. The predicted markets then, so the betting in terms of the financial markets on who is expected to be in the White House, just tightening once again, with Kamala Harris just about edging a very, very modest lead. The focus over the weekend was on this Iowa poll. The person behind that poll, well respected, but of course it is just one poll, and it showed that surprise lead in Iowa for Kamala Harris. Again, just a single poll when many others suggest essentially a dead heat ahead of that final vote, of course, on Tuesday. Let's flip the board and have a look at what to expect from the Fed, because they come through with their decision on Thursday. Expectations that you do get a quarter-point cut, but of course, looking into 2025, you're now not expected to be below 4% until about June of next year as markets readjust. Who's in the White House will play in, of course, that longer-term view. The opening trade is up next. This is Bloomberg.